The market is just going from strength to strength, despite all the negativity and all the uncertainty that has been thrown at it. If you want to know exactly where the market is going to go during the summertime, stay tuned until the end of this video. Subscribe, like, and leave a comment to help this channel grow and to help more investors make the right decision about the investment and to learn about the market. So let's get right into it. The market has been just spectacular. Since the low of April, it has just kept going up and up and up and up and up, despite the uncertainty with tariffs, despite the uncertainty with the Iran and Israel war, despite the bombing of the US on Iranian soil, despite all the tariff noise and negotiation back and forth with all the key trade partners like China, the European Union, name it, everything has been thrown to the market, and the market keeps going up and up and up, ranging higher and higher and higher. And we know that last week the market break out the all-time highs and will continue to go higher and higher. I mean, there is no doubt about this. Let's go and have a look at exactly what has been the key trends on the key indices and why technically it will keep breaking out higher and higher until the end of the year. And let's look at why the key economic data like unemployment, inflation, everything that has been thrown at the market. We don't see any inflation, not yet, despite what Jerome Powell is saying, that he is expecting more inflation because of tariff and so on and so on. So we know that there is no inflation yet in the market. We know the employment market is very, very strong. We saw it on the last week key employment data, that the market is very, very strong. And Jerome Powell now has no choice. He has to cut. He said he will cut 2 times, so that's mean at least 50 basis points by the end of the year. And we are already starting to see small cap going up, despite that we can see, and we will see in the chart that TLT is not going up. We saw that we see that today that the rate on the 20 years and 30 years is 4.95. It's flat. The curve is flat between 20 years and 30 years. 10 years is 4.42%. Still one of the highest rates that we've seen since the beginning of 2025. 2025 was 4.6, now we're 4.42, slightly lower, but on the 20 years, the highest we've seen was around 5.50, now we're 5.95, but we're still very far from where we should be on the long-term rate. So that's mean the market is not at all buying the story that there will not be inflation, and the opposite is true. If the market was expecting lower inflation, the long-term rate will go down. Now, even if the rate will be cut by by the Fed on the short end of the curve, if the long rate is keeping at 5%, we will have a steepening on the curve. So it's not because the Fed is going to decrease rate that is going to have a meaningful impact on the long-term rate. The long-term rate is very independent of what the Fed is going to decide. So we will see. But let's have a look at let's have a look at the key market data. Okay, you can see QQQ has broken the all-time highs at 541. Clearly is still above the breakout point, and maybe it can retrace and retest the all-time high and then break out much higher. It's very unlikely that it will test the all-time high again, break below, test the 2-month moving average, then break out again. Very unlikely that it will do that. You can see the market is overbought since quite a long time, since beginning of May. We are hovering the RSI at around 70. And you can see the volume has been very, very good as well, So you have volume, you have good technical indicators, and you have all the fundamentals that will support the market going higher. And we know that the earnings season is going to start very, very soon. And earnings season is always a good time for the market to go up. And there is nothing to expect that the market will not go up during this earnings season, especially that the overall Wall Street analysts have actually reduced all the hurdles for the company to beat the earnings and estimates and all the revenue and the guidance. So what it will be, maybe the key focus on the market during this earnings season is the guidance. We know that guidance is one of the most important things that the analysts are looking for, and what the market participants are looking for. The guidance must be good. It will be good, and that's why the market will go up and up and up. So let's see now the SPY. SPY. Same story, you know, breakout, clear breakout, 630, now we are 620. Probably we'll test again the breakout point or the all-time high. Just probably rebound to that point and then just break out much higher. Can you believe the extremely fast, sharp V-shaped recovery? Remember back in March and the low of April, the negativity, and even the professional investor was saying, this is it, you know, Trump has broken the market, this is the end of the economy, this is the end of free trade, all the doom and glooms, but nothing at all, nothing of that happened. So that's why you have to be always very reluctant to listen all these market participants, especially the professional investor. They don't know. They are like you and me. They just don't know. They make the best guess, but that's it. But very often they are wrong. RSI is still a very high, around the 70 marks. Volume, normal volume, much higher than before the crash, because you can see the volume line was much lower than what it is today. To me, the volume is very supportive of what the market is doing. And you can see just below the breakouts, you can see the volume profile here is extremely high. That means people didn't believe the recovery. You can see volume were picking up to actually peak at this level of 600. Now people are just being cautious about investing in the market at this level. But you will see during the earnings seasons, people will take confidence, guidance will be good, and the market will go higher and higher and higher. So now if you look at IWM should be the one benefiting from the 2 cuts that is forecasted by the Fed. But you can see we are hardly going back to positive territory on the year-to-date. Year-to-date is 0.69% minus. We have clearly break out the 200 moving average. That means we are going to go back to this upward trading channel. We are very, very short from entering this channel. And if we do, then the IWM will keep going up and up and up. You can see the volume has been also very supportive at this level. That means people become more and more bullish with the small cap. Small cap has been very frustrating. Look at that, you know, since so long, you know, that the world cap has done nothing. Go back to 2021, you see we are at exactly the same level. So you can see that the shape of this look like a huge cup. And then if we break out, bang, that's it. So that means first step is to enter the raising channel that we have seen in yellow here. After that, we have to break out the 240. Then if we break out the 240, then the sky is the limit. So small cap is going to be probably one of the biggest benefactors of the rate cut of the Fed. TLT, maybe, but not sure. But small cap, definitely, they will rally with the cut of the Fed. And they're going to probably rally before the Fed cuts rates, because the market always anticipates the move, and it is a discounting machine. So it will move way before the Fed cut rate in September. A lot of people say they can cut rate in July, but the probability that they cut rate in July is very, very low. If we look at the Fed Fund Watch, probability for July, let me see, you see, probability for a cut is 4.7%. Probability that they will cut rates in July is 4.7%. But if you look at September, the probability they will cut is 65%. Very funny, because you can see 1 week ago, the probability was much higher, you know, that they will cut. 73%. No, it's with 8%. You see? 8% that will stay the same. Now it moved up to 34%. Because the employment data has been very good. Inflation data has been very good. So a lot of market participants are very doubtful that the Fed are going to cut rate aggressively, or they maybe not going to cut rate, despite that the Fed has said that they will cut 2 times to allow the economy to grow faster and support the loans for real estate, consumption, and so on, you know, or financing activities for the small cap or the leverage companies. All the sectors that are interest rate sensitive will benefit from that. So you see, in October, you can see October close to 90% they will cut rate. And December, You can see 95% they will cut rate. So definitely don't expect a rate cut in July, probably September, but most likely September or October. At least the probability for October is much higher. Let's see what's going to happen. TLT has not moved up, you know, still at a very low level since back 2007, you know. Look at that. We have to go back to 2008, 2007 to have this type of level of TLT. So if you believe TLT will take advantage of the cut of the Fed, then you should invest right now in TLT because you are at the lowest point. Your downside risk is very limited, but the upside is very big. I am keeping my small cap. This is my interest rate sensitive move. I don't want to invest in TLT, but if you want to, you have a duration of 20. That means 1% move, 1% move down of the rate will give you 20% return. So that's something you need to think about and consider. TLT is not my cup of tea. That's why I don't do this. The VIX definitely is going down dramatically. You see, now around 17. We are reaching the lowest level of 2025. Pretty much a good level, of course, not at the level of 13. That was back in 2024. We're still much higher than the average of the year of 2024. But we are back to the level of 16, 17, which is not too bad, you know. Now, if you look at Max 7, you see, we have not yet broken the all-time high. All-time high is at 58. We are still at 55. Although that the recovery has been stellar, you know. Can you believe that? We have a recovery of more than 50% since the low of April, 50% for performance. RSI is very healthy at around 60, so it's not at all overbought. The volume has been good, but not like it's exaggerated. So this is probably not too late. The one who wants to play the breakout of the Max 7. And there is still some money to do. Despite the rally of NVDA, despite the rally of Meta, there's still a lot of Max 7 has not recovered. The one like Apple still very, very low, 211. Amazon also still very lower than all-time highs at 240. It's 220. Okay, break out the 200 moving average, which is good, but not yet reaching the all-time high. Google, the same story, you know. Very fair recovery from the low of April. That's very far from all-time high. All-time high is 208, is 175. Microsoft definitely breakout, one of the best of the Max 7. Microsoft, just an amazing company, you know. Tesla, very far from all-time high. All-time high is around 500. We are at 300. Very, very far from all-time high. So you see, there's still a lot of opportunity in Max 7. My swing trade CRM is doing well. You can see the trend, the uptrend of this into my yellow line is very respected and still continue. My trade is positive. My trade is but my target is first to go to 300, go back to the 200 moving average, and if it break the 200 moving average, it will go back to all-time high at 366. I expect CRM by the end of the year to go back to all-time high, and that's a bet I'm doing with my swing trade. Let's see if I'm right. You can see you have very, very strong company like Nike that has recovered. Very, very, very nice rebound from the lows of April. At least 50% from Nike. Yeah, 50% for Nike. I mean, you have a huge jump of SoFi. SoFi, you see, broke out from the all-time high. Amazing, amazing move with SoFi. United Health hasn't moved yet from the lows. Maybe that's a good play. You know, it's like oscillating, trying to consolidate. The RSI going up, consolidating. So it might be a good time to pick up maybe some shares of United Health, you know. AMD, you see, very far from all-time high, but definitely testing the down channel that you can see on the yellow line. Broke out the down channel. We tested on the last few days, and now should break out. Okay, my next target obviously is 173, but I think we should expect probably an all-time high by the end of the year because AMD is an amazing company. They will have the i350, the i400 chips. Inference is something that is going to explode in the demands for AI, and AMD is one of the leaders in the world to do that, and they do this with the most effective cost efficiency, you know, compared to NVIDIA. NVIDIA is the best of the best, but AMD has got a huge market potential for it. They don't have to compete with NVIDIA, you know. Even if they take 10% from NVIDIA, it's a huge upside for AMD. So AMD, one of my most bullish stocks in my portfolio, and I believe that it will go back to all-time high by the end of the year. That's my bet. You can see SMCI still oscillating, trying to break out the 50 marks. 50, you see, 50 marks has been tested 1 time, 2 times, 3 times, break it, just go back down. So 1 time, 2 times, 3 times, 4 times, 5 times, almost 7 times, you know. 50 is a very important resistance level for SMCI. And if it break out 50, you can see no resistance at all to go back to at least the 70 marks. So that's what I'm expecting by the end of the year, when you're going to see the earnings seasons, these times on the second quarter and the third quarter, and the guidance will be excellent because AI is booming. Then you will see the stock will go back to 70. And if it broke 70, then you can expect easily that it will go back to all-time high of 115 or 120. All-time high 120. So you see, you have an upside potential of more than 100% for SMCI. But don't be mistaken, SMCI is very, very cheap. SMCI will go back to all-time high. By the end of the year, I expect it to break the 70 marks. And depending on whether they're going to announce and what guidance they're going to give, it can go back to all-time high. Don't underestimate these stocks, you know. These stocks will rebound very, very fast. And when it will do, it will be too late to pick up the shares. You see Bitcoin testing all-time high. You can see one top, one double top, triple top, 5 top. How many times Bitcoin has tested this level of 110, you know, $110,000. Will it break out the $110,000? Could be, because it's not overbought. You can see RSI is hovering around the 50. The volume is very, very low. You see, despite low volume, it actually managed to regain the $110,000 marks. So it could be that Bitcoin will break out the all-time high. It will, eventually. The dollar is still very, very weak. It recovered a bit over the last weeks, but still very, very, very weak, you know. Level of 118. Now it's 117. But can you believe the euro is gaining so fast compared to the low of April or beginning of 2025? Beginning of 2025 was 103. Now we are 118. 118, you can believe it's like decrease of, for the euro, an increase of 13%, you know, 13% in 6 months. That's just an incredible move, you know. And it could be beneficial. It could be beneficial for the US, but it can be dangerous for the European Union because they are an export economy. And if the euro appreciates so fast by 13%, all the goods they're going to export are going to be 13% more expensive. And the US, it's the opposite. It's going to be 13% less expensive. So having your currency appreciate so fast, so in such a very short period of time, is not always positive. And for my portfolio, I'm invested mostly in US dollar. So despite the setback that I had on my currency exchange of more or less 13%, I'm up for the year to date, you know, which shows you the very strong performance of my US-based investment, despite the negative effect of the currency exchange against me. So if the dollar start to appreciate or correct back to the channel it has been trading since 2022, like that's mean around 110, then my portfolio will benefit from that correction, you know. So you see, it should go back to that trading channel here. This one and this one. So I will expect it to at least retest the 1.12. And if it does that, then my portfolio will benefit from that. So 5% is good. My portfolio is few hundred thousand dollar investment. So 5% is a huge move for me. You see, despite I'm losing 10% of close to 14% on my US dollar euro exchange rate, I'm still very positive for the year. So you see, my investment has been very, very good performance on a year-to-date basis. in US dollar terms, I would make a lot of money year to date, but of course, I'm a euro-based investor, so I'm losing a bit of that upside because of the dollar. Okay, I think we have been through the markets. We know that the economic data has been very supportive. The Fed is going to cut rate. That's going to be very supportive for the stock market. We know that all the negativity that we see in the market has not impacted the recovery of the stock market. And a lot of institutional investors, a lot of investors are behind the market. So the FOMO crowd will cry again, will cry again when they come back from holidays. They say, oh man, I'm massively underperforming. I have to buy the market. I have to take more risk. And you will see the market going significantly up during the last quarters of the year, There's no doubt about this. They are well behind it. All these fund managers that sold, they were crying doom and gloom. They sold there, I show you, They sold there. So they are behind. They are massively behind, They sold here, they made a loss. Even if they bought back here, They are still massively behind the market performance. So they will have to take risks to come back. Otherwise, they're going to explain, oh, they underperformed the market in 2025. And probably 2025 will be another year of excellent performance for the Nasdaq and the S&P 500. I wouldn't be surprised that the 7% that we see on the year to date for the Nasdaq, you see, we are now 7% year to date. We'll go to 20% this year again. So that's going to be a third consecutive year of 20% for the Nasdaq. And the S&P will not be far from behind, So stay tuned. Keep investing. Keep playing the long-term game. And you're going to make a lot of money. Just don't listen to all the noises, negativity. The AI trend is there and will stay. The technology trend is there and it will stay. And it's a great time to make good investment in the market and invest in this type of company. So thanks so much for listening. Don't forget to like, subscribe, and leave a comment. That's going to help this channel grow the audience and to help a lot of investors make the right decisions for their investment in the futures. Thanks so much for watching. See you next time.